Hi everybody, I'm Quinn Waddington, Portfolio Manager at Canaccord Genuity Wealth Management, and I'm going to talk to you today about real estate investing versus stock market investing. Now recently I put out a video on whether you should pay off your mortgage or invest those funds, and that caused a lot of feedback, a lot of questions, the main one being, okay, I'm going to invest those funds, should it be back into real estate or into the stock market? So I'm going to show you some similarities and some differences between the two, help you make that decision. Now before we get started, I should let you know that I have investments in both the stock market and in real estate, so keep that in mind as we go through this. So some of the similarities between real estate and the stock market, if you're thinking about which to invest in, then you're probably looking for a way to build wealth. And both of these are great options for that, whether it be for retirement or for a legacy down the road. Another consideration that these two are similar in is as an inflation hedge. So if you go to the store and the price of your groceries has gone up, then you can consider that as the same as the price of a house or a price of a stock has also gone up. So they're good inflation hedges, and we've seen that over the last year as inflation is beginning to rise, stock market and real estate is also rising. Of course, it doesn't always work, but generally they're both good inflation hedges. Another thing I'm putting in the similarity category is taxes. Now this isn't because they're the same, they have a lot of different aspects, but there are some pros and cons to both as far as taxes go. Principal residence has great tax advantages on the real estate side. RSPs and TFSAs also great tax advantages. Investing outside of those, either buying a rental property or investing in a non-registered account, there's some tax consequences there that need to be considered. So I'm going to put those three in the similarity categories. Let's move on to the differences between the two and help you make that decision. The first one I'm going to talk about is leverage. So in the real estate market, you can use a massive amount of leverage. So for example, in Canada, most people are putting 20% down, but sometimes you can put as little as 5% down to purchase a house. So let's use the example of $1 million home and you have your $200,000 down payment. Excluding all the other costs, you put your $200,000 in, you get $1 million home. On the stock market side, you've got $200,000, you put that in, let's exclude margin accounts for now, you got a $200,000 stock portfolio. So now let's assume prices double in the real estate market and in the stock market. So your $1 million home is now worth $2 million. Your $200,000 just made you $1 million gain. Whereas in the stock market, your $200,000 portfolio doubles, it's worth $400,000, so you've made $200,000 on your $200,000. So as you can see, when markets are going up, that leverage helped you make 5 times more money. Now, of course, we haven't seen this lately, but leverage works the other way as well. So if, for example, the prices of those portfolios drop by 50%, so your $1 million home drops to $500,000, then your $200,000 with the $800,000 mortgage you had is now $300,000 underwater. So you have a $800,000 mortgage, but your house is only worth $500,000. So you've lost $300,000 there. Whereas in the stock market, if that $200,000 portfolio that you started with drops by 50%, then you've lost $100,000 and you still have your $100,000 left. So as you can see, when markets are going down, leverage is not such a good thing. But of course, in recent history, we've seen leverage allowing people in real estate to make a ton of money. Diversification is another thing. It's tough to diversify in real estate. I mean, you can purchase things globally, but buying physical properties all over the world is pretty hard to do, pretty costly because you have to have property management. You have to be able to go and see the properties or at least trust people to buy these properties for you. So it's a lot harder to do than it is in the stock market, where you can get access to global stocks and bonds with the press of a button. So we'll give the benefit on that one to the stock market. Now, liquidity and costs are another thing to consider. Liquidity is a little tougher in the real estate market. As you know, if you've bought or sold a home, it usually takes weeks, often months, to purchase or close on or sell a home, whereas in the stock market it can be, again, a matter of minutes, and you can get your funds out in a couple of days. And the cost side of that, real estate costs, closing costs, all fairly high. And then if you're holding a property management, maintenance, all of that included there. In the stock market side, you're either paying somebody to manage your funds for you, or if you're doing it yourself, there's transaction costs, but those are all fairly minimal when you consider relative to real estate. So I'll give that one to the stock market as well. Now, easy to understand, I'm going to have to give to real estate. I think most people think it's fairly simple in the idea of buying if you're going to buy a rental property, you buy the home, maybe you have to fix it up a little, you rent it to somebody else, they pay you rent every month, you keep them happy every month, and you collect your money. Stock market, you have to dive into different geographies, different sectors, different companies, figuring out all that. And then you've got all the government-sponsored programs as well, trying to figure that sort of stuff out, whether it should be an RSP or TFSA or RESPs, all of that I can understand a little more complicated, which is where somebody like myself comes in. So I'm going to give that one to real estate, a little easier to understand for sure. Now, there is an option if you want kind of the best of both worlds, and we call those real estate investment trusts. So those are basically stocks that hold real estate investments. They get all the liquidity benefits, the lower cost benefits, the ease in the sense that you don't have to do anything, you just buy them like a stock, but they give you exposure to the real estate underlying those, so that could be an option for you in your portfolio. Either way, if you're going to go down the road of investing in stock market, in real estate, or in both, that's part of a financial plan that we would put together, help you out down the road. So give us a call if you have any questions. You can reach me at my website, waddingtonwealth.com. I look forward to connecting with you all, and leave some comments. Let me know what you think of the video, and if you have any decisions made or additions to this, that'd be great to hear. Thanks a lot.